Hello, and welcome to the second episode of my growth portfolio updates. In this episode, I thought I'd get right into the performance for this month, and we can see how we stacked up against other indices. So, we had a really great month, and then the entire market also performed really well over the last month, and we were up 10.62%, which is really good. Compared to the Dow, which was up 8.87, pretty close. We're basically in line with the Dow, slightly edged it out. It's good to see, 2% more pretty much. And then compared to the NASDAQ, we did better against the NASDAQ, about 3.5% difference. So that's good to see, especially because this portfolio is so similar to the NASDAQ. So if we're able to outperform, that is a good thing. And then the S&P, which is the main competitor that I'm mainly trying to outperform, we were able to pull it off again this month, and about the same amount as the NASDAQ, about 3.5% better, so that's good. And then we also have the Russell 2000, which this month completely blew us out of the water. I'm not sure exactly why or how. I don't really follow the Russell 2000, so I don't know much about it. But one thing I have noticed recently in the market is a lot, especially this month, like recently this month too, is that a lot of smaller cap and mid cap stocks have been performing really well. So maybe the Russell 2000 has a lot of those sorts of companies, and that's why it was able to perform as well as it did. But yeah, it was a great month for us, and you can see that we were able to increase our portfolio size and beat out most of the indices with the exception of the Russell 2000. So performance-wise, everything is looking good. Let's go to Max to see the entire performance. Again, we're competing against the S&P, so we're trying to widen this gap. We want to be able to get as far ahead as possible so that if the market does have any downturns, which we know affects our portfolio more because it's more growth oriented, so the downturns kind of hit us harder. So we want to widen this gap as much as possible while we're in these sorts of growth phases and like bull runs. So yeah, we are, at least this month, widening the gap a little bit. We're looking at about almost a 30% lead over the S&P, and I'd like to keep that as much as possible. And you can see the total rate of returns here over this period, which is basically since the inception of the portfolio in May 2022 to December 14th, 2023. So yeah, that's sort of the performance, and now I thought I'd go over some of the individual stocks and how they have been performing. But before that, one other thing I forgot to mention is the net contributions versus the investment change. As you can see here, we had about an increase of almost $6,000-ish, and you can see how much of that was investment versus the contribution. So it's nice to see when the investments are starting to outweigh the contributions, where we had about $3,000 come in this month from investment gain loss. Of course, that's unrealized gains, so those aren't truly gains yet. Those are just the stock's value increasing. We haven't sold out, so it's not realized, it's not really real, but it's nice to see the stocks moving in the right direction. We got 3,000, and as well as the 2,800 contributions that I put into the account. So the account is increasing pretty rapidly, and that's the sort of change we have for this month. $3,000 pretty much of gains, which is nice to see. Okay, now over to the holdings themselves. I thought I'd do the same thing where I sort by gain loss, and we can start at the top and move our way down. One interesting thing I saw Schwab added that I think I'll kind of go over and talk about my thoughts on, and I'll highlight every single company that I own, is the ratings. I now see sort of this ratings that go along with the stocks, and I thought I'd talk about each one and see how it compares to my personal ratings. So in last place, I don't think it's the same as last time. I think from the last video, Fortinet was last or something, but Moderna was definitely the stock that I liked the least last time, or one of the stocks I liked the least, and it's no surprise to see it at the top here for gain loss. It's also given a D by Schwab, and I think for this one I agree with that. I think that it deserves to be a D, if not worse, maybe an F, but I think that it is a stock where it's very risky and it's sort of traded down, but we just don't know when it's going to stop trading down, because obviously after COVID there's going to be a huge slump, and there's already has been a huge slump in their revenue, and we don't really know where the bottom is. We don't know when they sort of will start to stabilize and kind of hold steady in terms of like revenue and earnings. So it's very risky, and I think it deserves a D. I'm just going to go over a lot of these and say if I agree or disagree with the ratings. And then next we have Fortinet. This is a company I actually like, and it kind of has traded down, and it hasn't really, I think it's doing slightly better than it was last month. I think the gain loss improved a little bit, but not by much. And again, this isn't a major holding, and Moderna also is just a super small holding. That's the reason why I kind of am hanging on to it, just because it's such a small holding, and also I like it as exposure to sort of biotech, which I want to have a little bit of an exposure to in the portfolio, even if it ends up hurting us in the short term. So yeah, Fortinet is a B from Schwab, and I'd agree with this. I think B is actually pretty generous. I think for me, yeah, I'd say it's B as well, but maybe like a B minus. I think it's a solid company, and the overall valuation has come down a lot. So I think it's a lot safer than it was before. It's not at crazy PE levels like it was previously, but I don't know. I feel like there's slightly better cybersecurity companies out there. Fortinet's really solid, and I really love it, and I love cybersecurity companies. But this one, yeah, I just give it a solid B. I think I agree with that rating, and I just hope it starts trading better and starts going up more. But I'm okay with how it's doing right now, and I'll continue to probably add to it very slowly. I'm trying to dollar cost average into a lot of these stocks right now and just spread out the money, and not, because I don't see very many deals in specific stocks, so I'm just trying to spread out the money because everything's kind of going up. At least that's my plan for the immediate future. And then we have Unity, which is another stock I talked about last time that I'm kind of on the fence about. I don't think it's a great company, but it's again like Moderna, one of those riskier holdings. I do think it's slightly better than Moderna, because it's not, at least it's not in a free fall like Moderna in terms of revenue, and it's more solid in that regard, but very risky. I don't think they generate actual free cash flow or anything, so yeah, it's a much riskier growth stock, and their rating is an F. That's close to my rating, but I wouldn't quite agree with that. I think my personal rating would be either a D or a C for Unity. I think that they have a lot of potential, but also a lot of risk, and I think the chance of them realizing that potential is pretty low, which is why I give it a C or a D. but I'm again holding on to it kind of just because it's a smaller holding, and I think it's like okay for me to take the risk on it because I think I can see the potential, and even if it's a small chance, I'm willing to sort of risk this amount of money taking that chance, I guess. And it's actually been performing decently. I think actually better than decently. This month I feel like it's been performing really well, and it's gotten back in the positive gain loss. I feel like last video it was way in the negative, so that's good to see, and I'm just going to keep holding it. I don't really plan to add to it at this point, maybe if it trades down a lot, but for now I think it's good. Next we have Palantir, another very small holding. This one's actually performed super well, but I don't own very much of it, so you can't really so the actual dollar values are really small. Like if it's percent, it would be way up there in terms of like, you can see right there 23.49% returns, which is really good, but dollar values again much lower because of how small the holding is, and they give it a D. I almost want to agree with this because not because of the company itself, but because of the valuation. I think a few months ago, Palantir was like a B or a C for me. But now with how high it's traded up, I feel like a D is kind of fair. I think personally I'd give it a C, but I can agree with the rating a little bit because of the valuation. So yeah, I'll give that one to Schwab for now. Okay, next we're going to skip this one because I have the bigger holding of Google further down. Then we have Nvidia. This one, it's a holding I'm kind of building up. It's not too large yet. And I feel like for Nvidia they've given it a D. I don't know if I agree with that because unlike a lot of these other companies like Moderna or mainly like Unity and Palantir, these ones kind of deserve their ratings a little bit more, but I don't think Nvidia does because it's actually a company that has a lot of free cash flow, and it's actually in the stage where it's generating a lot of money, and it doesn't have many expenses. It makes more money than it loses, and I feel like because of that, because it's sort of gotten to the point where it's generating a lot of cash, I would say it's higher than a D. And even the PE ratio, in the short term, it's kind of an insane PE ratio, but if you look at like the forward PE of Nvidia, it's kind of in line with the rest of the S&P. I think it's about the same at around like a 24 PE. So I don't think it's too crazy of a valuation. I think it's a little bit higher than what I'd like, but it's an actual company that generates free cash flow, and I think it deserves more than a D. I think I'd give it Nvidia probably a B. I think it would be an A if it was like at the price it was a year ago. That's when I kind of bought into it in another portfolio of mine, and that's where I kind of saw it as an A, but right now I'd say it's a B because it's traded up so high. Next we have Netflix. They give it a C. I think this is kind of fair. Again, a lot of these I rate higher just because I'm kind of biased and because I own them. Like there's a reason why I own them. I think they're all great companies. But I think this is kind of fair. I think Netflix is kind of a B or a C for me. Similar boat to Nvidia. Like they're both big growth companies that actually generate free cash flow. So I rate them higher than companies like Palantir and Unity, but I don't know. The valuation of Netflix is getting kind of high. So I don't think it's like the best deal out there, and because of that, it's probably not it's not at like an A level or anything. I just give it a B. I think it's a B, but I think a C is also fair. I could see a C as well. Next we have CRISPR, which is very small, and so they probably that's why they don't have the rating. I'll just give my rating. I think that my rating would probably be like a C or a D. It's similar to Unity, where it's like a small company that is not generating much like free cash flow, and it's riskier, but I can see potential, and also it's just in there for biotech diversification or like exposure into biotech. Next we have FICO, which they have as a C. Again, this is like Netflix. I think this is like another B or a C, just because they're an amazing company, like crazy growth. They generate free cash flow, just solid all around. But FICO especially has been trading up like crazy. Like I think the valuation for FICO is out of control. So even more so than Netflix or Nvidia. I feel like Netflix and Nvidia more fair in terms of valuation, but FICO is just way up there. So maybe I think I'd give it a C as well. But FICO is one of those companies where even if the valuation is high, I think I'm okay at least dollar cost averaging slowly because of how good a company it is. But right now I'd say it's a C, and if it trades down, I'd give it a B or an A depending on how much it's traded down. Now we have Autodesk, which is a C. I think that this should be a little bit higher. I think that for my personal rating, I'd have it at a B because it's still, even though it's been trading up a little bit recently, it's still at pretty low levels. Like it's way below its 2021 highs, and I think it's more than recovered in terms of financials. So I think this deserves to be a little bit higher than a C. I'd give it a B probably. But yeah, I think it's a fair rating. And then we have Salesforce. This is a smaller holding. It's performed really well. I think I'm like double my cost base is 530, so this is only like 50% increase, but still I'm up about 50%. I bought in at just a really good time. There's not much like else to say about that, but for a B, I'm not sure I'd agree with that because I think the valuation's a little bit too high right now. I think I'd put it in the same boat as like Netflix and FICO, where it's traded up too much for me to give it like a A or a B. I think it should be like right now, I'd probably say it's maybe a C, but I mean, I'll take a B. I think that that's also a fair rating, especially if I'm not considering valuation. Then we have Apple at an A. I think this is fair. I think Apple is just an amazing company, probably, if not the best company in the world. And it honestly hasn't been it has been trading up a ton, but I don't know. I feel like it's got to be an A. It's just that sort of company, and I don't know. I think that they got it right with the A. Although, if I'm like taking my bias out of it, it's probably similar to the rest of these big tech companies, where it's probably more around a B or a C. But I don't know. I have to be a little bit biased with Apple, and I think it deserves an A. Then we have Cloudflare, which has been performing really well. Like a lot of these smaller companies have recently. Like I think Square and Cloudflare just took off this month, and now it's at a pretty high valuation, and they have it as an F. I don't agree with this. I think that Cloudflare deserves like at least I'd give it a C mainly because of the risks. It's more risky, and it has a high. I don't know if Cloudflare actually generates free cash flow yet, but I think that they have a much better chance of succeeding than other companies like Unity and like Moderna. And yeah, I just give it a C. I don't really agree with the F, but I can see why they gave it an F because of how risky it is as an investment and kind of the uncertainty around it. And then we have Google at a C. I don't agree with this because Google, unlike a lot of the big tech companies, actually hasn't been trading up that much. I mean, it has a little bit, but it's still at I think a 19-20 PE, which is like lower than the rest of the S&P. I feel like Google has just been in a lot of trouble, like lawsuits recently and like anti-monopoly sort of stuff, and that's what's dragging the stock down. And that obviously has a negative impact on Google, but I think that they've dealt with a lot of these things before. And just like before, I think they'll overcome it and just sort of keep going and keep being Google. And also Google is going to have a large share of like the AI, and they probably are going to be really fine in the future. So I don't think I'd agree with C. I think this is one of the rare cases where the valuation isn't that bad, and I think that it needs to be a higher rating. I'd say Google right now probably for me is like a B or an A. I think it's up there with Apple. Like I think that they're some of the best companies and that they should have that, and it should have that rating, especially because its valuation is lower than the rest of the market, which is kind of insane to me. Next we have Shopify, which isn't rated, probably because either because it's smaller or because it's an international company. I'm not sure why. I think that's probably the reason though. But for me, I think I'd give Shopify around a C because it's been trading up recently. I think that, I have to lower my normal valuation, which would probably be like an A or B. Like, I feel like 1 year ago, you could just take all my ratings and up them by 1, like 1 or 2, because the valuations were just so much better back then. But I'm kind of just, the reason why everything is like a C is because of how high all these stocks have been trading. Otherwise, they'd be way more attractive to me. Next, we have Palo Alto at a C. I'd actually agree with this. I think it's traded up a lot, and I think it's a really good company, but at a high valuation, and it probably deserves around a C. It's a really solid company. It's a little bit like safer than Fortinet, but it has a higher valuation, and that's why I'd give it a C. Next, we have Microsoft at a B. I actually just agree with this one. Like, I think Microsoft a year ago is definitely an A, but the valuation has gotten insane. It's traded up more than like other like Microsoft or like Apple and Google. It's traded up way more than those two, and it seems like everything's going right for Microsoft right now. They have a lot of like dominance in AI, and they're doing really well in cloud, and that's awesome. But I think that it's a little bit gotten out of control in terms of hype, and I think it's traded up to levels like the PE level is getting up to like 33 to 35, and I think that's way too high even with how well things are going for Microsoft. So I don't think it can be an A, but I want to give it an A, but it does deserve a B right now, I'd say. Next we have Square. This is another one like Cloudflare that's been doing really well this month. Unfortunately, it doing really well means that I have to bump down its score because the valuation has gotten higher. And I don't think I'd give it a D though. I think, again, like Cloudflare, I'd give it a C. And of course, 1 year ago, it would be a B. That's just how a lot of these valuations are going to work, or a lot of these like rating based on valuations are going to work. Next we have Amazon, which they give a C, and I think that's actually pretty fair. I agree with that. I think where it's trading, it should be around a C. And same thing with Costco. It's traded up really high, and I think it also deserves to be around a C. Just like a lot of these companies are pretty similar, and I think just like with like stuff like PanW, it kind of is in the same bucket where it's just a really great company, but the valuation's gotten too high. And I think right now it's still a good buy, but it's not like the great A buy that it was a year ago. Next we have Tesla at an F. Some people are gonna always think that Tesla should be an F or an A. I feel like there's no like middle ground. You're either gonna say Tesla is like an A grade or it's an F grade. It's not really stock. Many people have like a like middle ground opinion on. It's usually pretty divided in terms of that. But I think right now I'm gonna take that middle ground and say Tesla is about a C. I feel like I can see why it would be an F for Schwab. They probably think that, oh, it's a car company. Car companies should not trade at this valuation. And because of that, it deserves an F. And I understand that argument, and it's pretty valid. Like I can see where you're coming from. And you could also argue that Tesla is like a tech company on the same level as Apple, and that they have an entire ecosystem around their cars, and they're going to be able to sell software and profit off of that. And then you might say Tesla's an A. But I think that both those are valid arguments, and I think that we don't really know which one is going to happen, and we don't really know what the future looks like for Tesla. But I'd say it's about a 50-50 of going either of those ways. So for me, it's in the C middle ground. Again, it would be higher if this was a year ago, but Tesla has been on a streak this year of going up, and yeah, that's what brings it down to a C. I'd have it at probably a B a year ago, maybe even an A when it was at its super lows, but right now I think C is fair. I don't agree with the F, but I can see why they gave it an F. Next we have CrowdStrike. This kind of disappoints me. I do not like the D. CrowdStrike is one of my favorite companies, and it has been doing amazingly. Like a lot of the smaller companies on this list, like Square, Shopify, Cloudflare, and CrowdStrike, all smaller sort of companies that have been performing really well this month. And it even brought CrowdStrike all the way down to the second highest in terms of money gains, which is awesome to see. And yeah, 76% return on it, which is awesome. I do think it's getting really high, and I wouldn't buy it at this price, but I don't think it deserves a D. I think it's an amazing company that is continually increasing its revenue. It has amazing growth and very consistent growth. It still hasn't gotten to the level of like maturity as some other tech companies, but I think it's almost there. It's like turning the corner in that regard, and it's probably on its way to generating a lot of free cash flow in like the very near future. And I'd give it a C because of that. I think that even with the crazy trading up that's happened with CrowdStrike, I think it still deserves a C. And if it trades down, it will increase in rating. It'll go to a B and an A if it trades down a lot. So I'm hoping for one of those things to happen. Hoping for it to trade down a little so I can keep buying in. And then last but not least, we have the biggest gainer and my biggest holding, which is Meta. And they have it as a C, and I'd agree with that. I think that Meta was one of those companies that traded down a ton and was trading like at a 14 PE, and back then it was an A. Like, I think that it was an obvious buy at that point, and like a amazing tech company like Meta trading at that level definitely warranted an A in that, like a year, 2 years ago. But now that it's back to where it sort of was in like 2021, it's back to a C for me. Like, it's still a really good company, still solid, but you know, I can't give it an A or a B at these like high valuations. But I think it's great. I think it continues to just pump out money, and it's just really good growth. So yeah, I agree with C. That's good for Meta. Well, that's all the holdings, and I hope you enjoyed, and I'll see you next time. Thank you for watching.